BOTZ 39.83, Asian signal activated. We're bypassing the noise and looking straight at a structural shift in the market. Let's decode exactly what this means for your portfolio before that US opening bell rings. Here is the bottom line up front. NVIDIA just dropped a massive $2.1 billion post-close investment right into Iran. Now, Asian markets, they've already priced this in, and that sets up a highly probable transmission straight to the US markets tonight. The figures held exactly as we expected. We're tracking a structural capital flow here, meaning smart money is getting into position for the long haul, and our execution window is opening right now. It is absolutely crucial to understand why this specific capital flow is the exact catalyst we've been waiting for. So the Korean market has officially closed. On paper, sure, the KOSPI index hit an all-time high, finishing up slightly at plus 0.11%. But honestly, ignore that headline metric. That upward direction is a total illusion. It's just a composition output heavily weighted by a few giant stocks. The real story, the one dictating the flow of smart money, is hidden deep within key supply chain nodes. Capital is aggressively moving upstream, straight into the companies actually building the hardware, and we need to track its exact landing zone before the US opens. Let's run our Canary protocol. This is our early warning system to detect subtle shifts, and we've got a brilliant divergence right in front of us. Take a look at Samsung Electronics, down 1.10% because of specific union strike risks. But then look at SK Hynix. It surged to an all-time high, up 1.93%. So what's the main takeaway here? The traditional semiconductor correlation is completely fracturing. Broad sector buying is officially over. With foreign capitals suddenly dumping these traditional bellwethers, we literally have to use specific node targeting to find the real alpha today. We can't just rely on the usual suspects anymore. And this fracture leads us directly to the physical AI nodes. This is exactly where the smart money aggressively rotated today. I mean, Hyundai Motor Company surged an impressive 7.17%. Securing massive foreign net buying, and Rainbow Robotics jumped a massive 12.48%. The surprising catalyst driving all this? Huge plans to produce 30,000 Atlas robot units. This concentrated cash inflow completely obliterated the heavy short-selling balances that were just sitting on Hyundai. The physical AI chain isn't just moving right now, it is practically sprinting. But here is the critical contradiction. This is the logical gap we absolutely must solve tonight. While Asia aggressively priced in these physical AI and data center infrastructure catalysts, the US regular session remains completely unpriced. Just look at the data. The US BOTZ ETF closed essentially flat at minus 0.13% yesterday. Key players like Dell and Supermicro actually fell due to pre-existing pressure. The US market simply hasn't processed this post-close NVIDIA catalyst yet. And you know what? This exact gap is our pricing advantage ahead of the open. So don't let the flashy mainstream headlines obsessing over stagnant indexes fool you. We are focusing strictly on the supply chain. That's where the real moves happen. We're shifting from analysis into pure execution mode now. Listen closely because here is your playbook for the session. All right, here is your tactical decision matrix. Keep a very close eye on the NQM26 buffer at 28,700. If BOTZ crosses 39.83, boom, that is your clear entry trigger. However, you absolutely must protect your downside. Exit immediately on any support breach. And if NQM26 drops below 28,500, invalidate the entire plan. Just scrap it. Remember, sometimes doing nothing is doing something. Cash is a position, and preservation of capital always comes first. Now, before deploying a single dollar, we really need to assess the macro trap. Our entire supply chain logic rests on one crucial condition. Non-farm payrolls must print exactly between 40,000 and 90,000. Why? Well, because this Goldilocks zone proves the labor market is cooling just enough to maintain the Fed's rate cut expectations without, signaling an outright recession. That delicate balance is what keeps our target path perfectly valid. Okay, memorize these invalidation triggers. Liquidate any longs if average hourly earnings hit plus 0.4% or higher. That's a glaring stagflation signal, meaning sticky wages are keeping inflation high, and it entirely blocks our Asian signal transmission. Abandon the plan completely if NFP runs dangerously hot at 150,000 or if the US 10-year yield breaks that 4.50% ceiling. Keep in mind, these conditions operate independently. If any single one triggers, the play is off, completely off. Here is your final confirmation checklist. Before that opening bell rings, verify the pre-market volume for BOTZ and double-check those specific IREN nodes. Do not act prematurely. You have to wait for clear pre-market volume confirmation to ensure the volume actually matches our structural conditions. If the conditions conflict, the signal fails. Patience really pays here, so wait for the data to confirm the narrative. If you want to keep front-running the market and receiving these crucial Asian closing signals before New York even wakes up, make sure you're subscribed to Lo Rocha, your global sector scout. The real alpha isn't found in the obvious headlines, guys. It's found right here in the supply chain shadows. So I'll leave you with this. If physical AI is already overriding massive short interest in Asia, what do you think happens when the US retail market finally wakes up to the robotics boom tomorrow?